Markets move when people move together, and understanding that early is the real advantage. When we move together, we shape outcomes, build wealth, and secure a safer future. US equities closed higher with the S&P 500 up 0.8%, driven by solid earnings reports and a more dovish Fed narrative. The Dow and Nasdaq also rose, supported by cyclical sectors benefiting from stabilizing inflation expectations. Positioning into cyclical and value sectors remains favorable as inflation shows signs of easing. Monitor tech for signs of exhaustion after recent rallies. Core inflation data came in slightly below expectations, reinforcing the view that the Fed may pause rate hikes. This has eased market fears of aggressive tightening, contributing to today's risk-on sentiment. Expect volatility around future economic data releases. A sustained inflation decline could extend the current market rally. Energy stocks surged on higher oil prices, driven by ongoing geopolitical tensions and supply concerns. This sector led gains and outperformed the broader market. Energy remains a key beneficiary in the current environment. Position exposure selectively to capture momentum while monitoring geopolitical developments. Financial stocks showed robust gains as bond yields stabilized and loan growth outlook improved. Banks and insurers led the sector's advance, signaling confidence in economic resilience. Financials could continue outperforming if economic data supports moderate growth and steady yields. Tech stocks lagged behind today's rally, reflecting profit-taking after recent strong gains. Some high-growth names are consolidating, signaling a pause in momentum. Caution warranted in tech over the short term. Watch for volume spikes and support breaks to gauge deeper pullbacks. Markets embraced risk-on sentiment amid easing inflation concerns and stabilizing central bank outlooks. Investors rotated into cyclicals and value sectors while trimming some tech exposure. Risk appetite should support equities broadly, but remain alert to data that could reignite volatility. The US dollar weakened slightly as risk appetite improved, but geopolitical tensions in Eastern Europe continue to pose upside risk for safe haven demand. Currency volatility may increase if geopolitical issues escalate. Hedging near-term currency exposure could be prudent. Earnings season remains a key driver. Financials and energy posted strong results, while tech earnings will be critical this week to confirm the sustainability of recent gains. Focus on earnings surprises and forward guidance to identify sector leadership shifts. Highest conviction setup, XLE. Energy stocks are currently benefiting from a combination of rising oil prices and supply uncertainties amid geopolitical tensions. With inflation moderating and central banks pausing hikes, energy demand remains resilient, supporting strong sector momentum. XLE is likely to continue its upward trajectory as oil prices maintain strength and investors favour sectors with tangible earnings growth. Expect relative outperformance versus the broader market in the near term. If this breaks, a significant drop in oil prices due to easing geopolitical tensions or a global demand slowdown would undermine this thesis and pressure energy stocks. What happens next? Markets will likely remain supported by easing inflation data and a Fed pause, favouring cyclicals and financials. Tech may consolidate, while energy sustains gains amid ongoing geopolitical risks. Renewed inflation surprises or hawkish Fed comments could trigger a broad market pullback, especially in growth sectors. Escalation in geopolitical tensions could also drive safe haven buying and volatility. Tomorrow watch upcoming CPI and PPI data releases. Fed speakers' tone for policy clues. tech earnings reports and guidance, oil price movements amid geopolitical news, US Treasury yield curve behavior, dollar index reactions to risk sentiment shifts. Markets move when people move together, and understanding that early is the real advantage. When we move together, we shape outcomes, build wealth, and secure a safer future. Real wealth starts with discipline, health, and strong relationships. Take care of yourself. Take care of the people you love. Stay focused, keep learning, and stay informed. Until next time.